Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the 3 things you need to know today. First up, a massive Amazon Web Services outage, taking down major websites and platforms with it overnight. Amazon now saying that the outages are easing. It's seeing significant signs of recovery. Amazon, Robinhood, Coinbase, Disney Plus, and airlines, among others, all hit when the cloud provider said an operational issue affected multiple services. Yet the outage not really concerned for investors. Amazon shares little changed ahead of the open. Meantime, futures are pointing to gains ahead of a big week for earnings. Markets higher across the board, with the Nasdaq the top performer. Investors will be watching key results from Netflix, Coca-Cola, GM as the reporting season heats up. Also key this week, more regional bank results and developments around trade with China. And the delayed September Consumer Price Index report finally coming out on Friday. It'll be the Federal Reserve's last look at inflation ahead of next week's rate decision. While the market does expect a cut, beyond that, the outlook is murkier. Because of the government shutdown, agencies haven't been able to collect data. The September CPI data is crucial for Social Security recipients in particular, as part of the formula used to calculate the cost of living adjustments for the next year. Let's get a check-in on stock futures. As we mentioned, we're seeing things higher across the board here this morning as investors gear up for this big week of earnings. We've got all 3 major averages indicating a higher open, but as we said, the Nasdaq in particular showing a gain of about 0.6%. An Amazon Web Services outage affected major online apps and services ranging from Coinbase and Robinhood to Fortnite and Snapchat. According to the AWS Health Dashboard, the issue originated on the East Coast, affected nearly 100 services. Joining me now to break it down, Yahoo Finance tech editor Dan Howley. Dan, what do we know about the outage thus far?
Yeah, it seems as though things are starting to clear up. They say that they mitigated a number of the issues that were impacting Amazon's AWS. And, I think at this point we're going to start to see everything recover and not really be as I guess, negatively impacted as we had seen. But I mean, it was a massive outage. I know, many people were likely asleep as it was happening, but, the huge swaths of the internet were just unavailable and inaccessible. And I mean, this is kind of just what happens when you have these massive players and this kind of concentration of users with them.
I mean, exactly, Dan, right? This is a reminder of just how reliant so many other things are on just a handful of big players. Now, AWS, we know, is one of the dominant so-called hyperscalers, or provides this kind of backbone of the internet. It's the biggest according to market share. So, what does that mean then when something like this happens in terms of how interconnected it all is?
Yeah, I think the big thing to think about here is, like I said, over-reliance on a single large cloud provider. Now, a lot of companies, it's worth pointing out, kind of use multiple types of cloud providers. They'll use Microsoft in addition to Amazon and Google, just so they have a backup just in case something like this happens, right? They have the ability to then go and continue to remain online. But whatever was accessible via AWS usually just came offline. And so, it does speak to the fact that Amazon is absolutely massive. We do most of our work, we're online right now, right? You're streaming this online. I'm talking to you via the internet. All of these things happen online. And so when something like this goes down, it really does just mean it's completely useless at that point, right? So, I think for Amazon, obviously, we've seen issues like this before in the past, right? Where there's been huge swaths of the internet go offline because of AWS or other services as well, right? Not just to pick on Amazon, although they are the ones that caused the most recent issue. But I do think it's just worth remembering that while we talk about how amazing AWS is or these kinds of web services are, they are fallible and they will go offline. And when they do, it can be catastrophic at times.
And we should also mention, when it comes to Amazon, this is the only stock of the Magnificent Seven that's still lower on the year. And I guess part of it has to do with concerns over slowing growth at AWS.
Yeah, and slowing growth, and their AI story isn't necessarily as clear as what you get from Microsoft or Google, or Meta for that instance. I think when you look at Microsoft, you say, oh, they have OpenAI. And they're rolling this out across their various enterprise and consumer products. And you look at Google and you say, oh, they have Gemini. They're rolling that across their consumer and enterprise products as well. Amazon offers all of this as well, but similar products as well. But they don't have as clear of a story, I think, as the Microsofts and the Googles do. And I think that probably has a good deal to do with it. Not to mention the fact that obviously spending, consumers are worried a bit at this point. And I think that's kind of why we're not seeing it perform as well as the other tech stocks. But, I mean, sure, we could talk about, Apple. They don't have AI as much, I guess you could say, as other companies do, though they just launched those new iPhones. They're also just Apple, so everybody continues to use them. And Meta, they're making money through AI in their investments with advertising. And so, it seems as though all the other companies have if not a very clear picture like Microsoft and Google do, then at least some pathway forward when it comes to AI. And Amazon, not particularly.
Interesting. Dan, we're going to keep tracking it. Thank you so much. Appreciate it. And we got to dig into some more of our top stories of the day. Earnings season getting underway with big names set to report this week. Automakers specifically among the first to report, with Tesla on deck for Wednesday, and the delayed September CPI report set to be released on Friday. Joining me now, Yahoo Finance senior reporter Brooke DePalma, senior autos reporter Pras Subramanian, and Fed correspondent Jennifer Schonberger. Brooke, I'll start with you. We got futures pointing to a little bit of a gain this morning. Maybe some earnings optimism creeping in here.
Julie, that's exactly it. Investors really looking past this government shutdown. We also got those easing trade tensions between the U.S. and China, with Trump making comments over the weekend that rare earths, fentanyl, and soybeans were top issues, and those talks are expected to continue ahead of that key early November deadline. But earnings are really where investors are focused on right now. We're going to hear from some key companies, including Coca-Cola, Netflix, Southwest, as well as Intel this week. That will give us an eye into how exactly the third quarter, where we saw those record gains, went underway for U.S. consumers and more broadly global consumers as well. Looking at Coca-Cola, Evercore ISI coming out with a note saying that they expect resilient demand here in the U.S. as well as Western Europe. That could be offset by some weakness in Latin America as well as China and the Middle East. That'll give us insight to the consumer. Then we have Netflix giving us key insight into the media landscape. We know that live events like that boxing match and also that K-pop Demon Hunters could have been a big hit, and we'll look for Q4 guidance when it comes to the content pipeline. Then we have Southwest, and what we heard from Delta and United was that this premium, this higher income consumer was really driving revenue there. Southwest is a low cost airline, and so it'll be interesting to see how their consumer is doing. And then we'll sort of wrap it all up with Intel, and this will be key for investors because this is the first report after it got that 10% stake from the U.S. government. It also got a stake from NVIDIA, and UPS does expect Intel to deliver results in line with expectations based upon strong demand for their PCs as well as their servers. So we're really getting key insight into each of these different areas. And right now it seems like investors' focus is all on that.
And speaking of earnings, Pras, we got to talk about the big auto earnings this week. I mean, I think Tesla usually trumps everything else. We'll talk about GM too, but what are we looking for from Tesla?
Yeah, Tesla Q3 on tap for Wednesday after the bell. Is this sort of like the high watermark for sales, right? So, in terms of estimates, looking at 26.27 billion of revenue, up $1 billion compared to a year ago, on adjusted EPS of 53 cents or so a share. EBITDA coming in around 3.8 billion. Now, I mentioned sales, right? So we saw sales hit a quarterly record of 497,000 units globally in Q3. Not surprising given the expiration of the EV tax credit, right? As a quarter end, a lot of people kind of came in and bought their cars before that credit expiration. And also you had record deployment of energy products, right? So that's good for them too. But so, like I said, what the big questions are the new cheaper Model Y and cheaper Model 3 going to help boost sales, right? We're going to hear the latest on robo-taxi deployments too. What's going on there? Is safe driver going to go away? Are we going to new cities? Those are all part of the big things people want to hear about as Q3 earnings come this week.
All right, so we'll be watching all of that. Let's also talk about General Motors and what to watch there.
Yeah, so real quick, revenue 45.16 billion is estimates. Now, that's down 7% compared to a year ago, so not great there. EPS of $2.27 a share there. Now, what's big here is the EV business, right? So we saw that they took a hit of 1.6 billion just a week ago on that EV business. Want to hear more about that? What's sort of driving the negativity there? Obviously, the tax credit expiration, but is there issues with investments too, right? Because GM is going to be making about a $4 billion investment in the U.S. over the next year or two because of tariffs, right? They want to increase their production footprint in the U.S. What mix of that is going to be gas-powered, EV-powered? How much of more potential hits are they going to take with the EV business? Or are they sort of more bullish on it because they think that they have better cars that are cheaper going to come out and they can sort of sidestep that tax credit loss?
And as if all this earnings news wasn't enough, we're finally going to get some government economic data coming out on Friday, Jen.
Yes, finally. Julie, day 20 of the government shutdown today, and Fed officials have really been flying blind without key official government data to make an informed decision on monetary policy. But they are in luck because this Friday they will be getting the all-important read on inflation through the Consumer Price Index. The only reason, however, that this is being disclosed and released is because the statute by law requires the BLS to calculate inflation as an input for the cost of living adjustment for Social Security payments. And that is required to be posted before November 1st, hence why it's going to be put out at the end of this week. But looking at estimates for the data, we expect that CPI on a core basis, which excludes those volatile food and energy prices, which is the measure that the Fed prefers to look at, that expected to hold steady for the month of September at 3.1% from the prior month. If we look at the headline, though, year over year, that expected to pop up a bit to the same level as core, 3.1% versus 2.9%. Month over month, however, both measures of headline and core expected to hold steady. Nevertheless, when we look at inflation at 3.1%, that's well above the Fed's 2% target, right? Over a full percentage point above that. And while Fed officials are going to be getting inflation data that seemingly continues to move in the wrong direction, they are still sitting in a vacuum without key employment data. And so they're still trying to weigh that other side of the equation. We'll see how long this government shutdown lasts. Investors expect another rate cut at the end of this month, but after that, if Fed Governor Waller has sort of put the brakes on expectations for further rate cuts, given that we still need to see how these data play out.
Yes, so we'll see if we are getting any of that by then. Thanks so much, guys. Brooke, Prost, Jennifer, appreciate it. Coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Now time for some of today's trending tickers. We're watching Apple, Kering, and L'Oreal, and BNP Paribas. First up, Apple. The stock getting an upgrade to buy from hold at Loop Capital on positive iPhone demand. Apple was also added to Evercore's tactical outperform list amid its latest refresh cycle. Now, all of this, the background is new data from Counterpoint Research showed the new generation of iPhones is seeing stronger demand than usual. The iPhone 17 series outsold the iPhone 16 range by 14% over their respective first 10 days on sale in the U.S. and China. That again, according to Counterpoint. Next up, Kering and L'Oreal. The luxury giant is selling its beauty division to L'Oreal for $4.7 billion. The companies also said they'll work together to create and distribute fragrance and beauty products for Kering's designer brands. We're talking about names like Gucci, Bottega Veneta, and Balenciaga. The move, a reversal on Kering's part to take on companies like LVMH and Hermes, who have performed strongly in high-end fragrance. The transaction includes the sale of perfume maker House of Creed, which Kering bought only 2 years ago. Finally, BNP Paribas, shares of the French bank falling to a 6-month low. That's after losing a court case that analysts said could result in a costly settlement. A U.S. jury found the French bank helped Sudan's government commit genocide by providing banking services that violated American sanctions. A federal jury in Manhattan ordered the bank to pay a combined $20.5 million to 3 Sudanese plaintiffs who testified about human rights abuses. Lawyers for the 3 plaintiffs said the verdict opens the door for for over 20,000 refugees in the U.S. to seek billions of dollars in damages from the French bank. BNP Paribas denied in a statement that it's under pressure to settle and said it has the unwavering intention to appeal that ruling. It is a big week for corporate earnings. Big names, including Tesla, Netflix, Coca-Cola, Intel, and more are set to report results. Joining us for more on what to expect is Eric Clark, CIO at AccuVest and portfolio manager of the Logo ETF. Eric, thanks for being here. So as we set up for getting more into the thick of earnings season, what we heard last week from the likes of the banks, by and large, was positive, even though there is some concern about credit exposure at some of the banks. But given the economic backdrop and what we've been hearing, what do you think this is going to shape up to be in terms of the earnings this week?
I think earnings are going to continue to be good. I mean, stability. You never know if sometimes from some of the volatility in the markets, but I mean, earnings have been really strong and stable. Lots of good earnings per share growth. Good efficiency gains, and AI is just being rolled out to the average company. I mean, that's a 2-year type of phenomenon. So we're much more bullish than some of the short-term data indicates. We just might have a little bit of choppiness into this tariff legality that starts the first week in November.
Well, and Eric, I know that in particular, you're looking at sort of consumer spending trends and how that's going to inform earnings. So what do you think? I mean, there's a lot of talk about this sort of bifurcated economy right now, or the K-shaped economy, or whatever name you want to give to it. How then does that feed into what we're going to hear from companies?
Yeah, Julie, I mean, listen, later on, earnings for consumer companies happen a little bit later in the earnings season, so we'll hear a little bit more. But, you know, the banks told us about spending and how consistent it's been, although consumers continue to be very choiceful in their spend. You know, the K-shaped economy is real. I mean, some people have been kind of tightening their belts, dealing with inflation for the better part of 5 years. Walmart is serving them well, Costco, TJ Maxx, et cetera. And so there is this bifurcation. But we think in 26, we get the market broadens out. The economy starts to reaccelerate. We have Fed rate cuts coming. Inflation should kind of peak and tail off into 2026, which should give, you know, the average company a lift. And, you know, nobody talks about it too much, but most companies have been in a bit of a rolling recession for the last couple of years. So 26, we kind of think is the reacceleration year. And we have midterm elections. The administration certainly needs to step off some of the non-growth focus and get the economy humming again. So we're pretty constructive about the rest of the market when it's been a pretty narrow market this year.
Eric, I am curious what you make of the action over the past few weeks. You talked about the volatility that we've seen, and we've seen sort of broadening in the past few weeks in that we've seen a rotation into defensive. So utilities, healthcare, staples, those have been the best performers this month, and some of the more cyclical names are down. And so is that a sign that there actually is more concern under the surface of the market than it appears?
Well, I mean, sometimes. I mean, there's volatility that's trending, and then there's volatility that isn't. And, you know, we have this big catalyst coming up here in 2-3 weeks. And so it wouldn't shock us if we get some de-risking ahead of that. And some, you know, we had the bank issues with some of these frauds. That always puts people back on their heels a little bit. But again, earnings are the ultimate driver of markets, and earnings are pretty good, and they're set to accelerate. And we're already seeing a lot of revisions higher. And typically what happens is revisions start to rise, and then the ISM and some of the economic data follow. And so you know, any pullback in the markets because of this short-term headline risk, we think would be bought pretty aggressively, just simply because there's a lot of performance chasing that'll likely happen here at the end of the year.
And so where do you want to chase that performance, or where do you want to invest in this market?
Well, I mean, listen, if your base case is that the economy should reaccelerate, then some of the cyclical areas that have underperformed this year would have a much better year in 2026. So that would be consumer discretionary, some of the financials. The financials were doing exceptionally well up until about 3 weeks ago. So we think financials reaccelerate, M&A accelerates, consumer discretionary starts to perform again as the consumer starts to feel a little bit better with rate cuts. And we have Netflix on tap, tomorrow morning or tomorrow afternoon. We think Netflix is a positive surprise. Super stability in earnings, good margin expansion, implementing AI. And that's a theme we're going to hear in 26. What does the average company do with AI? How do they deploy that to throughout the company? That eventually will lead to earnings revisions, better margins, better profitability, and expanding multiples. And that's the next wave of the AI deployment. Thus far, it's just been semiconductors and the build out part, but now we're going to get into the deployment part, and that's really where we're focused.
Eric, thanks so much. Good to see you.
Thanks a lot.
Coming up on Yahoo Finance Opening Bid, executive editor Brian Sozzi is the host of that program. He's with us now. What's coming up?
Hey, thanks, Julie. We have a buffet table of things we're talking about here today. A little Apple, a little crypto, a little earnings season, and then Coach's former longtime CEO Lou Frankfurt stops on by for a Power Player segment, talking about the future of American manufacturing, Julie.
Looking forward to it, Soz. That does it for Morning Brief. You got much more ahead. Opening Bid is next.